Shaun says, when I see covered call stock ideas like in your email alerts, unless it happens to be a stock I already own, I don't see it as amicable to me. Okay. Since it seems wrong to just go buy 100 shares because you want to do a covered call. However, does it follow that any stock that would be a good candidate for a covered call would be a good candidate for a credit spread or other strategy? Potentially, yes. And there's a lot of similarities. And what I mean by that, Shaun, is if we go to covered calls, you and I talked about this on our coaching session the other day. You've got the monthly picks of the day and weekly picks of the day. And what these essentially are is Ernie went through and ran about 80 different iterations searching for monthly covered call positions. He was essentially challenged during a coaching session like you and I had the other day, where a customer said, okay, I see you have these default searches, and I know you guys have this portfolio Mike talks about on the webinars about rollout opportunities, but just tell me what to trade. What is a good way to just trade covered calls and not worry about it? The best way to be assigned, get my return and move on. So Ernie went through after that and he started here. And when you go, I'm sorry, you should have shown you that a little bit clearer. When you go to covered calls and you're looking at the monthly or weekly picks a day, these are only updated once a day. I'm going to talk about that more in a moment. But it tells you what we're looking for. But if you see how we develop these results, that link there, it gives you an introduction to what he set out, what he was trying to do. And we're seeking trades to make money long-term in almost any market condition. And he started off not looking for in the money covered calls. He was open. He started using our historical tools and he would run a search over a 3-month, 6-month, 8-month, 12-month, 15-month, 18-month period. Just keep extending the time. Does this still work? Does this still work? Does this still work? And set up with the stock criteria that we thought would have worked at first, then made adjustments, then look for ones that, hey, in this market, these look like these perform better. And here, and the objective was to earn about 20% per year. That's logical with covered in the money covered calls for a yearly return, looking to be about 1.5%. And of course, you need to have some exit strategies. But he literally went through different iterations in the money, how deep in the money, at the money, out of the money, how far out of the money. Earnings per share growth, price per earnings, price to book, price to sales, broker recommendation, trading above a Bollinger Band, below a Bollinger Band, above the MACD line, below a MACD line, SMA 20, SMA 50, uptrend, downtrend, avoid earnings. He ran through all those iterations. And of course, the one that came out with the best results over the market with 2 little foibles in there of the tested time frame, with the 3 years tested, 87 trades monthly, looking only about 2 or 3. Right. They're usually most of our defaults picks of the days are looking at just about 2 or 3 trades, maybe 4 trades. So 85% winners with a success rate of 3.9. 5 trades were stopped out with the stop in order, and the average loss was 10%. But that was a 59% return or 19% average of the year. Kind of what you expect with a covered call approach. And you're looking to make 1.5%, with those kind of things at different market conditions, knowing you're taking losses. No rolling or management was used. The question Ernie was posed to is that the investor didn't want to do rolls or adjustments. Just show me the best covered calls to trade right now where I have a good probability of being assigned and it works over time. Okay. So, sorry about that. That's kind of what the picks of the day are doing. But again, as I mentioned, these are only updated once a day. As a Power Options user, you can go into the search for covered calls or cash secured naked puts, and the defaults are there. Now, your question was, if it's good for a covered call, is it likely good for other strategies? Stellantis, there's a firm. Tiger, GTLB, Upstart, AA, KSS, TTD, AMD, Dow. Okay, so we've got some good names here. I want to scroll down here. Now you can see the exact criteria that's used. For an in-the-money covered call, that probability we talked about, greater than 65%. Downside protection, looking for a minimum. No, he's actually not, but he's looking for minimum return if unchanged at 0.7%, minimum percent if assigned. This is for the weeklies. That's why it's not the monthlies. Stock trading above the SMA 20, days cross over the max signal at least 1, no earnings between now and expiration. So would these stocks here, with that criteria, looking at a neutral to bullish position, Shaun, would this mean also that these would be good positions for, say, a bull call debit spread? Maybe a diagonal calendar call, poor man's covered call. Y'all know I hate to use that term, but it's a common term. Or a bull put credit spread. Let's find out. Again, Stellantis, Affirm, TIGR, GTLB, Upstart, KISS, KSS Coles, excuse me, Toast, BBWI, XYZ, Billy, and Snell. My preferred bull put credit spread represents about 12 to 15% of my portfolio. I could go to the weekly picks of the day, and we've got Costco and MMM, a little bit different. But let's go to the search. I want more results. It only shows the top 2 or 3. Okay, there's only 3 here, but they are different. But what I wanted to show you here, Shaun, is that I'm looking for a higher probability of 85%. But I'm looking for stocks over the SMA 20 and days over the MACD signal of at least 3. Very similar technical criteria, avoiding stocks that have earnings between now and expiration, especially for a credit spread, and we're purposely excluding indexes and ETFs. Now, I didn't see the same trades here. In fact, I don't see any of them, but they all have similar trends between what we'd be looking at here. Let me go back to the covered call search. So I don't think I see any of the same ones. Maybe they're on the second page. We were talking about Costco. Is it on there? CCL, Carnival, Gap, probably have lower returns. Nope. ADM. No, I'm not seeing the same ones. And that's interesting because a lot of times I do. And of course, Shaun, I'm sorry, if I go to the naked put default screen for weekly naked puts, which again is a parity trade, and these are out of the money now. That's monthly, I'm sorry. And you're not seeing it, I'm sorry. I didn't want to pause the screen so you guys didn't have to keep watching that. All right, here we go. All right, so now we've got Alice, EOS, Hut. These are a little bit different, but this one does not use a MACD view. If I add that MACD technical here, and again, it's just because Ernie found out for whatever reason, this criteria worked better. I think it was over 1, right? Yeah. Did I narrow that down? Upstart, Affirm, TTD. This is almost the same list that we're seeing in the weekly covered calls because they're close to parity trades. Now let's just take I mentioned bull call debit that I don't have up here right now. Let me add it real quick, Shaun. Let's just add other strategies. Let's take out long put. Let's add bull call debit to our view account. And let's go to bull call debit and just search. I think this is just a monthly default. I have a weekly that in the sample searches. But I want to see some similarities, but oh, that's weekly. Okay, I want to go more monthly. Initial values. Let me pull up initial values. Sorry, folks. All right, so there's Alcoa, Cleveland Cliffs. So we're seeing some similar ones that were in the list. And then the second page, American Airlines, of course, is in there. I'm looking for some other ones. But the idea being, what do I look for with the in the money covered call, Shaun, we were talking about? We went through this. We're talking about, I want a position where I think the stock is strong enough to stay the same or move up in price, but I'm looking for a good return with a reasonable downside protection. If it comes up in the covered call search, my expectation for UPST after I do my research is, yeah, I don't think this stock's going to fall below $49 per share. I think it's going to stay in this range of $50, $52, $55 for the next 7, 10, 15 days. An out-of-the-money bull put credit spread at 49, 47 would match the sentiment for that strategy. And, you can do it in that fashion. You, of course, could. But my preferred approach is, hey, I'm going to do pulled puts. On Monday, I'm going to go into the search here, and I'm going to look at, this might be the same ones, but probably around 10:15, 10:30 a.m., maybe closer to 11, after whatever news comes out, settles down. I'm going to pick my next 2 or 3 bull put credit spreads for 11 days out in time. It'll be for the 7th of November expiration from what comes up on this list. Even though some different ones are in the covered calls, but this is the strategy. This is the search criteria that I like to use for bull put credit spreads. If I was doing a covered call, which I really don't do anymore, but if I was doing a covered call, it would come from that monthly or weekly picks of the day view.